So we'll see Jenny in just a second. We have a few people that we know are going to be late, and we have Ryan who is joining us today. Ryan, again, a reminder, is our financial assistant. So real quick prompt, a reminder that your creative assistants and your financial assistants are done on the 22nd, which means that if they've sent you any drafts or anything like that, and you do want changes to it, you really need to be getting back to them like now, because they need some time to work on any changes that you would want for them to be able to submit it. Remember that the funding for that program is external. So if they don't submit their things externally to this funding source, then they won't get paid, which means it needs to be done. So if you can't get back to them, I would say by the end of the day tomorrow, you're probably not going to see changes on anything that you want changes on. Yes, Dave has a fresh haircut. It also shocked me when I saw him yesterday as well. Looks like what regular Dave instead of COVID Dave was what I was telling him yesterday.
It's been a while. Feels so big and free.
You can feel the wind by his ears.
Oh, my head's so cold now.
Oh yeah, and it's raining out, so you know you had that protective layer, and now your head gets wet.
It's true.
Getting haircuts, what a simple joy it is.
It really is.
Go ahead.
I said it really is.
Agreed. Other updates that we have for you, we have a new face here. So everyone, if you can, turn on your cameras, or if you can't, throw up a wave to Amanda. Hi, Amanda. We are super excited to have Amanda here. Amanda is the newest member of our team at Leap Junction. So Jenny will have to watch the recording of this where I say nice things about her, but Jenny has moved into a new role where she is going to be our newest business coach. So similar to what Dave does. So she'll be offering one-on-one coaching. And I know she's worked with a couple of you specifically on social media and brand strategy already. So that will be really exciting. We're excited to have her with us full time now doing that until November. And we're also super excited to now have Amanda joining our team. Amanda will be backfilling Jenny's role. She has a myriad of experience in social media, in promotion, and in running her own business. So Amanda, do you want to say hi to our group?
Hi, so nice to virtually meet everyone. And yeah, I'm really excited to sit in today and hear what's been going on in the last few weeks. I know you guys are at the end of your summer here with your businesses. So I'm looking forward to demo day and sitting back and drinking it all in.
That is a good way of putting it. And fun fact, Amanda actually used to work with us once upon a time when Leap Junction was just starting out, and she helped form the first Leap In cohort.
Mm-hmm. It was quite a few years ago. So I was saying yesterday, Leap Junction has come such a far way since when I was initially there, and I'm really excited to see how this has developed and see your projects kind of come together.
Well, we are excited to have you here. Thanks, Amanda. Amanda's going to be hanging out with us today, and if you do have questions around, Amanda has some great experience operating brick and mortar locations of a store. So those of you that are looking for physical retail space, Amanda would be a great contact for you. We'll get her all set up with how to take bookings and stuff in the next little bit. Today is only her second day, bear with us. But Amanda, if I can get you to pop your email into the chat, that would be super helpful. And then anyone that is looking for any assistance or just wants to say hi to Amanda, you can shoot her an email while we get all of that stuff set up. Awesome, thank you very much. With that, did we have any other announcements? Oh, yes, thank you, Dave. One more announcement that I did want to make, and this is sort of our bad, we had wanted to ask you to do this already. So as you're prepping your demo day videos, we just want to give you a brief reminder to keep your audience in mind. This is a Fanshawe event where there'll be a lot of Fanshawe people. We're inviting community people, and we're inviting obviously some of your friends and family. With that being said, please do your best to include a thank you to Fanshawe College in your demo day video. So it's a Fanshawe platform. It would be really great if you could say thank you to Fanshawe in some way or another. I see a couple of you are rolling your eyes at me like you've already finished this. Even if it can be a slide at the end, that would be something really great to add. The college gave you $5,000. Saying thank you to them is probably a decent human being thing to do. If you have hated the program, you don't need to say thank you to Fanshawe, but it would be really great if you could. Cecilia.
Do you mean like the programs we're in or coming out of, or like LEAP?
Either. So your academic program has nothing to do with this program,
Yeah.
but to thank both, you could just say thank you to Fanshawe College in general. So thank you, Fanshawe College, for supporting Ecclesia by Cecilia. Would be great. Any other questions about that? Okay. Going to assume that that means none. So with that, Dave, Jenny, Amanda, were there any other updates we wanted before I throw a chaos wrench into this group and we play some fun games?
Jenny, you had messaged me about an announcement, I think that Brittany wanted to make.
Yes. Brittany, would you like to, is Brittany here? Sorry, I can't see everybody. I'm dealing with tech issues.
Brittany is here.
Brittany, would you like to make the announcement or would you like me to?
I can do it, I guess.
Okay.
So I think, I don't know how many of you guys saw like in the Discord chat, but pretty much like every week I've been posting little stories with like our mascots. And so I wanted to do one with Leap In. So I think we're going to take the photo tomorrow if everyone's okay with that. And it's just going to be like the little mascots are going to like kind of join the Zoom meeting. And then like we'll take a screenshot and then I'll also like take a couple photos on this end. It should only take a couple minutes. So yeah, and then if you want to be tagged, like your company to be tagged in it, it's going to go up this Friday. So just like send me a message or an email with what you want to be tagged, if it's like your personal or your business Instagram account. Yeah.
Awesome.
Oh, yeah, really good idea, Brittany.
Thanks, Brittany. And I would say that goes for anyone here. If anyone was looking to take a screenshot for their social media or say, hey, if you've been wondering what I've been doing lately, we can do that tomorrow. For those of you that have asked me to tell you in advance about photo taking so that they can shower / and or do their hair, myself included, now we know we need to shower for tomorrow. Dave's all excited. He's got his new haircut, touching it, making sure that it looks good. We're good. Okay, so my friends, today what we are going to do, we're going to have a little bit of fun. We're going to once again compete for the coveted Chef's Table gift cards that we know everybody is so excited to win. Those of you that have gotten them already, hopefully you will be able to spend them quite soon when the restaurant opens in the fall. What I'm going to do is I'm going to split you out into breakout rooms, and I have a scavenger hunt prepared for you. There are 30 items on the scavenger hunt. I will be absolutely shocked if you can find all 30, but you will be split up into pairs. And in those groups, you're going to try and find as many as you can. The winning pair is going to get the coveted Chef's Table gift cards, which you shall receive by mail. So the items that you need, I have just popped into the chat. Additionally, for your convenience, if you are the kind of person who likes to have something that you can check off as you go, you will see, oh, I just lost it. You will see nothing because I can't find it. You will see that I have also put the document in there so you can download it and check it off. You have all of 35 seconds to read this before I shove you over into your breakout rooms. Dave and I will stay in the main room. If you are interested in having a clarifying question, then you are more than welcome to definitely reach out and come back and see us. Amanda and Jenny, you've been automatically sorted into rooms, so you get to play. It's going to be fun. That also means you are eligible to win the prize. This is your welcome in your new roles. Does anyone have any questions? Does everyone understand how a scavenger hunt works? All right, you need to be able to show the items. So for example, you can't just tell me I have a piece of dental floss in my house. I need to see the dental floss. You can't just tell me that you have a toilet paper roll. I need to see that roll of toilet paper. All right. Are we ready? Are we steady? You have 10 minutes to gather as many things as you can. Go.
I think we lost somebody at the last second there.
We did. I'll just pop them into another room.
Does that mean is there a solo person?
No, I had a group of 3, so that actually worked.
Oh, okay.
You're still recording.
Whoops.
Okay, welcome back, team. In one of the few times that I'm going to actually force this, I need you to have your camera on so I know you're not running around looking for things while I am talking to you. Amazing.
No
Jenny, you
cheating.
better not be running around with your camera on, you sneaky, sneaky woman, you. All right, she's at her desk.
Virtual backgrounds hide everything.
Virtual backgrounds hide everything, yes. All right, thank you for humoring me and playing my game. I'm a big fan of scavenger hunts in real life and even on Zoom because I think they're fun and they get us up and moving. So there were 30 items that were on our scavenger hunt list. Did any group get 30? 29? 28?
We didn't count.
Okay,
No, we
Yeah.
didn't count
That
either.
part of the job.
take 10 seconds to count. Go ahead and count.
Jenny, how come you're on here twice? Oh, phone and computer. That's fine. Got it.
Virtual backgrounds hide everything.
Rachel, did you get that last item? Oh, she just messaged me. Never mind.
Yes.
Yes.
Jenny, how many did you get?
7.
Once your group has a number, just throw up a thumbs up reaction for me. All right, thank you, Brittany. Thank you, Tracy. Groups 1 and 2.
Amanda's still counting. Cecilia and Maisie, you guys still counting?
I think we have 20.
Oh,
All right.
I think so too, yeah.
Amanda and Brooke, do you have your number?
Think so. We'll find out.
Brooke's still counting. I can see her lips moving.
We got doubles. We got doubles of stuff. Let's count twice. Okay, yeah, we're good.
Okay, awesome. Okay, so Amanda and Brooke, how many do you have?
Think we said we got 19.
19, nice. Cecilia and Maisie, you have 20? Excellent. Rachel and Tracy, how many do you have?
26.
26!
oh,
Ooh, and Jenny and Brittany, how many do you have?
I think we have 20.
Goodness, 26. Awesome job, everyone. I mean, 20 even in 10 minutes is staggeringly high. Well done, everyone. All right, you got to prove it, Rachel and
I'm
Tracy.
so out of breath.
All right, I will call out. Yes, now you have to put the stuff away. I know. So
Oh my God, this is so funny.
I am going to, Dave, if you can help me out with
yeah.
this.
What do you need?
I'm going to call out what they are, and each group that has them just hold it up. And so I'm going to note beside it, 1, 2, 3, and 4. So everyone that has a Fanshawe hoodie, hold that up. I see group
Yeah,
3,
Tracy.
just group 3. Oh, group 3.
Wait, from every group?
and Group 4. Okay. Who has bath bombs or bubble bath?
Cecilia, didn't you have a
Yeah, is it every group?
hoodie? Yeah, it's everybody.
Okay. 1, 2, 3, and 4. A pair of sweatpants. And it looks like everybody. Nobody stood up to show me the ones they were wearing. That's sort of surprising to me. All right, a floppy disk. Does anyone have one of these in their house?
Who doesn't know what a floppy disk is?
I love that. It is the old form of a USB or CD. Who had a full bottle of wine?
None of those in my house.
3.
They're all gone.
All right, so we don't have one from Jenny and Brittany. So 1, 2, and 3. Oh no, Jenny
Yeah.
got that one.
Yes, I do. It's homemade.
Respect. Does every group have one? Sorry, I thought I only saw 3. Amanda and Brooke, do you have one? Yeah, okay, everyone. All right, sorry about that. Who has a child or animal toy?
That makes
Looks
sense.
like everyone's got that. All right. Who has a spatula? Oh, that's cute, Amanda. Oh, yeah, everyone. Does anyone have a sourdough starter? Where's Ashley when I need her?
I wasn't sure if that counted as like yeast, so I brought yeast. But
No, I don't think that quite counts. You need the gross foamy jar of essence. No, I do have one of these, and that's why I put it on there. Oh, you're gonna whisk one up. Oh, kombucha SCOBY. Oh, I might have counted that. I have one of those downstairs too. A candle. Brooke, if you don't have a candle, I'm gonna be very disappointed. Everyone's got a candle. Awesome. A handmade craft. Also a candle. Yeah, I got that. Amanda's behind you. Okay, everyone's got one. Nice. A piece of exercise equipment. All right, Cecilia, Amanda, Rachel. Tracy picked up the bottle of wine again. Fitness is also my passion by lifting my chest. Okay, Brittany and Jenny, do you have a piece of exercise equipment? Nope. Okay. A Christmas decoration. Yep, everyone.
I left it on the counter. Can I get it?
Oh, yep, you can. Hurry hard. It's curling. Nice. Okay. Some dental floss. Excellent, excellent. Okay, good. Glad to see we have such excellent oral hygiene here. Who has a fan shop pen? You were all sent one, so I hope that at least some of you have one. Nice, Rachel, Brittany. Just Rachel and Brittany.
Hey, don't like that.
Okay,
my mic's still
that's groups 3 and 4. A piece of Lego. Tracy, nice. Only Tracy? Oh, nope. Tracy and Jenny. Okay. What would you call it?
It's broken. My dog ate it, but I think it still counts.
Very good. Who has a nickel? Maisie, Tracy, Brooke. Jenny and Brittany, no nickel? Okay, who has a cookbook or recipe book? Very good, everyone. Okay, who has a bottle of vitamins? Nice. Who has a gardening tool? Jenny, sit back down.
I have soil. I didn't know if this would count.
I'll take it. Yeah, you know what? Okay. It is a tool for improving the health of your plants. Who's got some Lysol wipes or spray? Everyone? COVID has really made us prepared. Who has a Halloween mask? Not to be confused with a COVID mask. Jenny, Rachel. Okay. All right. So that's groups 3 and 4. Who has a motivational quote or picture? Cecilia, Jenny, Rachel, are you grabbing one too? Yep, very nice. No motivation for you, Brooke and Amanda, eh? A handheld mirror?
Future candle idea.
Rachel, nice. Cecilia, 2 and 3, okay. A button. Oh, you have a lot of buttons, Rachel, well done. Cecilia, yeah, makes sense. You have a button. Brooke, okay. Jenny and Brittany, any buttons?
Does it count if it's like on our clothing?
Yeah.
I was confused. Okay, I'm wearing jeans right now. So does that count? There's a button.
All right. A roll of toilet paper. Excellent. Again, excellent hygiene. COVID has made us great. Does anyone have hair rollers? Does anyone know what hair rollers are? Okay, yeah. I'm with you, Dave. I also have hair rollers. Does anyone have a rolling pin? Tracy, Maisie, Brittany, and Amanda. Okay, everyone's got a rolling pin. I thought that one would be harder. Who has something tie-dyed? Jenny, I know you have something tie-dyed. Brittany, Rachel, Amanda, Cecilia, and Maisie, you guys got anything? No tie-dye? All right. Does anybody have a Remembrance Day poppy? Now, that's a hard one in, July. And last but not least, does anyone have a birthstone ring? Tracy, Amanda, nice. Okay. So adding this up, it looks solidly to me like group 3 is our winner.
I would agree.
I only got 22 of their things, but I still think that that's pretty darn good. So group 3, congratulations. That is Rachel and Tracy. Congrats. 20, you have 26 of theirs?
Yeah.
All right, perfect. That's why there's 2 of us. Awesome, well done. So Tracy and Rachel, as per usual, and especially to you, Rachel, please send me the address in which you would like your gift card sent, and I will mail you a fancy gift card that says you are awesome for winning the scavenger hunt and for being the Leap In scavenger hunt champions. I hope that you are able to enjoy a lovely lunch on us, preferably together, because that would be a great way to have some networking after the program ends. And with that, I will turn over my incredibly fun session to Dave to talk about cash flow, which will be equally fun. Right, Dave?
Yeah, yes, 100%. Yeah.
100% is fun.
You're a terrible liar.
I
Okay, before we start, I'm going to give you guys actually a bathroom or a body break really quick because we're going to be at this for a while. So 2 minutes if you need to take a little break, go for it, and maybe grab a coffee or water. So yeah, come on back in 2 minutes, okay? And we'll
and to put everything away, Cecilia. Yes.
Yes, yeah, that too.
All right, we'll see you in a few minutes, guys.
All right. So today we are finally completing our financial modules. So this is the final one of the kind of end of the financial plan. But this is probably the single most important module in the entire program, I would say, when it comes to gaining more control in your business. So this module is designed to help you kind of, further design your business to kind of meet your own financial goals. Cash is essentially the key element, to success in your business. So today we're going to be talking about monitoring that cash, monitoring your cash flow statement, as well as we'll dip into a little bit of kind of building off what Libro joined us about last Thursday, and talk a little bit around seeking funds. Okay. Before we get started, do we have any questions? Everyone's good? Everyone's okay? Cool. Okay. I won't be able to see you guys, so if there's something you want to ask, just unmute yourself or throw it in the chat. Cool. Okay. So what we're talking about today, basically we're going to learn kind of the basic difference between profits and cash flow and the importance of cash flow to business startups. And those of you who already passed that stage, also for your operations and of course, supporting growth. So the most important thing to remember from this presentation is that businesses can operate without profits, but only for a very short time and never without cash. Because as the saying goes, cash is king, also queen, right? In business, no other saying could honestly be more true. Without cash, it is literally impossible to pay for expenses, purchase integral pieces that are key to the success of your company. Cash is essentially the lifeline of any business. So purchases your equipment, it pays for other aspects of the business that essentially build your profit. So without cash in your company, ultimately you might fail. Now, 1/3 of startups close before the end of their second year in business. And after 6 year of business, typically 60% of business startups shut down, unfortunately. The reason for closures are, well, many. There's a lot of reasons, but sometimes maybe the entrepreneur shuts down the business by choice, but all too often businesses fail and the entrepreneurs are forced to close the doors, usually due to something related to cash flow and finances. There are thousands of articles, research studies and books out there that have been written on the reasons for failure and how to avoid them. But whatever source you review, it will probably include most, if not all, of these top 10 reasons that I've listed here. Now, of these reasons for business failure, 6 are actually directly related to an entrepreneur's financial plans. Some relate to profitability, but most relate to having the right amount of cash when needed. So which of the reasons for business failure can happen as a result of poor cash planning here? Anybody want to take a guess at a couple of them? Abby's not here to be the crutch.
Insufficient money.
Any other thoughts? Remember, there's 6. I missed it. Sorry, Tracy.
I'd say ignoring the competition, like just kind of doing your own thing and not really paying attention to what they're doing.
I think it's important, definitely, but a little less related to cash. Inventory management, that's definitely one too.
I think a lot of them could be related to money, if not all of them. Even poor location, because if you're spending too much on a location where you're not getting the traffic that you want, then that's a not misuse, but you could be making better choices with your money there.
I think, yes, you're right. It depends on how you're wanting to frame it. We're talking in terms of cash planning. So yes and no would be the answer there. I'll just kind of go through them and give you a kind of context of what I'm thinking here. So the first one, most important one, definitely is insufficient money. Businesses, that do not receive enough startup money, well, tend to fail, right? If your runway runs out, well, then that's it. The second one was already mentioned. That's poor inventory management. So if you're stuck with inventory that can't be sold, that ties up your cash and ultimately can bleed you dry. The next one and most common one that I experience with some of our companies that are a little bit further into their growth is that uncontrolled and unexpected growth. This means, you're stocking more inventory, there's more equipment, there's more payroll, more accounts receivable possibly, and that all puts a toll on your kind of constant cash needs because you kind of end up in unfamiliar territory. It's unexpected, and it kind of goes without a good business advisor, a good financial advisor, maybe even a CFO, uncontrolled or unexpected growth can quickly get out of control. The next one to really pay attention to is overinvestment in fixed assets. We see this every year with our Leap In participants and their $5,000. They decide to just buy a bunch of stuff, a bunch of equipment, and that's great. But buying equipment that does not aid in the production of profits is, that can unnecessarily tie up your cash as well. Number 5. Poor credit arrangements. And I think someone threw that in the chat. Businesses must pay their cash on demand. Businesses that must pay their debts use cash quicker. So make sure if you're using credit cards, if you've got any type of credit arrangements, you're on proper payment terms. These are things that you can manage, according to your growth. And we'll talk about that a little bit more later. The last one is low sales. Obviously, if you have low profits or no sales, well, you're not going to have an adequate cash flow and you won't have adequate revenue as well. So how do we actually avoid these fatal errors? Well, by having a good understanding of your business's need for cash and its ability to actually generate cash flow, this will give you the ability to stand on a stronger position in your business. This is critical to the successful startup and ongoing operations and growth for your company. So cash management is a critical skill that all entrepreneurs have to have. When you implement, sound financial planning, mixed with a bit of monitoring that you understand of, all the statements that we started talking about in last day, then you'll be able to build a successful business with healthy cash flow. Now, as I mentioned before, this isn't a skill that's going to come overnight. It's going to take time to learn how to monitor these statements and learn from them so you can make good projections and better decisions as you move along in your business. So let's talk a little bit about cash management. So to have successful cash management, you kind of need to follow a few steps. The first one is to just at least measure your cash needs as you get started. You need to know how much cash you need, when you're going to need it, and what it's actually going to be used for. The second thing you need to do to have good cash management is make sure that you seek potential funding sources. Once you know how much you're going to need, when you're going to need it, what it's going to be used for, you want to find sources of cash that offer funding terms that match your own goals for those funds and can support you through your growth. The last thing to pay attention to for cash management is to monitor your ongoing cash needs. So you need to establish goals for your cash flow. And we use these goals to monitor, how much cash we need on a 12-month, 2-year, 3-year basis. So we're always projecting ahead. If in this program, we're asking you to do 3-year projections at the most, right? The reason we do this is so you can get ahead of it and set cash flow goals so that you can kind of see and plan for what's coming down the pipeline in the future. So we're going to talk now in this section a little bit about cash flow. So we're going to learn about the major sources of cash, which are profitable operations and funding, which either equity funding or debt funding, and the difference between profit and cash flow. Okay. So where does our cash come from? Well, first off, cash flow, what is that? Cash flow refers to all the money that comes into your business and goes out of your business. But we need to also know, where does this actual cash come from exactly? So cash should be generated first and foremost by your business through revenue generating activities, usually your sales. So cash is also sought from sources both internal and external to the business through either equity or debt funding as well. So when you think about it, cash in your business will, it's going to take many forms. It can be loans, it's revenues and sales, it's debt payments, it's payroll, inventory purchases, and expenses. And all of these represent elements of the cash flow in your business. Now, when the cash stops flowing in and out of your business, well, the business dies. It's like a shark, it has to keep flowing, has to keep moving, or it dies. Cannot maintain a business without cash. Now, a good question to ask is cash used to generate profits, or do profits generate cash? Who wants to answer this question? There's a hint on the page there. The answer is. Anyone want to take a stab at it?
Brooke said both in the chat.
Oh, I didn't see that. Sorry. Yes, the answer is both. It was a trick question. So there's no decisive answer here. It's meant to just kind of think about it for a second. It's kind of like asking, what came first, chicken or the egg? But what you have to remember here when we ask this question is cash used to generate profits or profits generate cash. A business can operate, again, for a time without profits, but it can never operate without cash. So cash is used to start the business, to support that growth, to purchase assets that generate revenue, support revenue generating activities of the business, which in turn should refuel the business with even more cash. So cash then is used to build profits. Okay. So yes, it's kind of it's cyclical in nature. But if cash is used to build profits, then what is the relationship between profits and our cash flow? You may remember this equation from our last module. This was the net income equation. So another way to ask this question of, what is the relationship between profits and cash flow is to ask how cash flow is different from net income, or net income is also our profits, if you remember. So in last module, we discovered that net income is calculated by subtracting sales, or subtracting from sales the cost to produce those sales, or cost of goods sold, and the expenses necessary to operate the business, which is our operating expenses. So the income statement reports this equation in detail. And we went over studying income statements last day. And from the income statement, we get to see whether our business is producing a profit or a loss. So if you're producing a profit, showing a positive net income, the question is, are you also producing positive cash flow? So if you have profit, do you have positive cash flow? The answer is not necessarily. So this is why we need to monitor our cash flow accordingly, because just because we have a great profit showing on our income statement doesn't mean that we have enough cash moving in and out of our business to support our business operations. So let's take a look at the difference between how business activities affect the income statement and our profits versus the cash flow report. So here we have the income statement and the cash flow report for 1 month, which is January. This was on page 336 in the readings for today. And it's for a consulting company. Doesn't really matter much about this company, but if you want to turn to your page 336, you can follow along in more for detail here, because we're spent a little bit of time here. So before I jump into this, before I go into breaking down kind of this income statement and the difference between that and the cash flow report, I'm going to show you guys a quick video that's going to just kind of do high level, quick overview of the cash flow report. Okay, so just give me 1 second to switch my screen share. Sorry guys, 1 minute.
So your cash flow statement starts with your net income at the top. The bottom line of your income statement is the top line of your cash flow statement. So your net income sort of approximates the cash that you earned or lost in your last period, but it's not exactly right. There's some adjustments that you need to make. Sometimes when you sell a product to a customer, instead of giving you cash, they may wait 30, 60, 90 days before paying you. Now that number, that sort of deferred payment, that's called an account receivable. But what it means is it did not come into your company as cash. It gets included in your revenue number, so it seems like it's part of your net profit. But for cash flow calculations, you've got to reverse out that account receivable in order to figure out what really the cash is that you earned in this period. Sometimes entrepreneurs are afraid to bug their customers to ask them for money, but to be honest, it's just another point of contact between you and the customer. So think of it as an opportunity to engage with your customer, not just as an important opportunity to collect those receivables. If you let your receivables get out of hand, if you let customers defer paying for your products, that can eat into your cash, and you may not be able to afford that. Go get those accounts receivable as quickly as you can. It's critically important for your cash flow. The other thing that significantly affects your cash flow are your accounts payable. Again, that's the money that you owe to your vendors. A lot of entrepreneurs sort of manage their cash flow by managing their accounts payable. And so if their accounts receivable are a little bit slow, then maybe they'll slow down their accounts payable to try to keep the cash flow level. So, your net profit adjusted for accounts receivable, adjusted for accounts payable, put all that together, and that represents your cash flow from operations. And that's the core cash flow of your business. That number is probably going to be pretty different than your net income. And so you want to make sure you understand what's going on there, analyze why it's different, and figure out, is there a problem there you need to solve? Below your cash flow from operations is the cash that you use for capital expenditures. And then the next part of your cash flow statement is the cash from financing activities. And basically what that means is if you raise debt or you raise equity, that increases your cash. If you pay off debt or you buy back equity, that reduces your cash. You don't really want to muddy up your business processes, i.e. your operations, with the cash flow related to debt and equity. So that's why we put it on a separate place in your cash flow statement. So now you can put all these things together, look at the revenues at the top of the income statement, flows down through expenses to your net income at the bottom of your income statement. That goes to the top of your cash flow statement. You flow through your cash flow statement to the cash at the end of the period. That flows over to your balance sheet, the cash at the end of the period in your balance sheet. So you can see that these three statements, your balance sheet, your income statement, your cash flow statement, they all tie together beautifully in the end. It's really important that you understand the relationships between these different financial tools. When an investor comes in, they're going to want to know that you really understand the elements of your income statement, the revenues, the costs, the expenses, and how that generates income for your company. But they also want to make sure that you understand the difference between your net income and your actual cash flow. That requires that you really know how to manage things like accounts receivable and accounts payable. Don't just leave it to the bookkeepers and accountants, because after all, it is your business.
Okay. One sec, guys. Okay. That was just some, helpful tidbits and helping you understand kind of the relationship of where cash flow kind of sits into relation with our other financial statements we talked about last day. Now, I definitely encourage you, if you haven't gone through the readings today, make some time to do the readings today. It's really important that you understand kind of the intricacies of cash flow. I don't have time in this entire session to go through all the complete details. But I thought we would use kind of this exercise as an example to kind of show just the relationship between a little bit between the income statement and the cash flow report using this example here. So from this example on page 336, we're given a little bit of details. And we know from the reading in there that this consulting company that this exercise is showing, they started business. So day one operations started with 5 clients. And that they sent invoices on January 31st. Therefore, the revenue that they have here, revenue of $39,000 or gross margin up here from sales, is posted in January. Okay, so that's the key thing to remember. And now, since it's day one, that's posted in January, we don't see that over here in cash sales yet in our cash flow. So that's important to know. That's the first thing we know. So net sales from this day one don't carry over into the cash flow report. We know from the reading that they allow net 30 payment terms, meaning they're giving them that grace period of 30 days and hoping at the 30-day mark that their clients, their customers will pay their bills. This means that the money will not be collected in January and probably not February either, because honestly, who pays their bills on time these days, right? So that means that we're probably going to have to, when we're doing our cash flow projections, we're going to have to look to, to February as well to make sure we're covered, to make sure that these 5 clients, that money we're expecting from them is actually going to be covered in the following month. Okay, so we can't just say, oh, I put out this much. I have this many sales coming in, that's going to come. We'll have money to cover. No, we have to plan that they may not pay on time. The third thing to note here is that most of this company's operating expenses that we see here. Operating expenses, $14,850. So we've got advertising, we've got marketing and promotions, we've got some office supplies and other things there. They're all paid out of the company's checking account. Therefore, these amounts are paid for and recorded in the same month. Okay, so everything here on our operating expenses, less one line that we'll talk about, which is outside services. So everything here gets carried over into the cash flow report under operating expenses. So things that come out of your checking account, those are directly applied and directly carry over, okay, in the same month. Now, payroll is recorded and paid in January as well. So you'll see payroll expenses matching here as well on both reports. And then also of note here is that depreciation is calculated on the equipment owned by the company. So it is an expense, but does not cost the company any cash, okay? Remember, we talked about that both in Kelly's session and when I went through my lecture last week as well. We talked about amortization and depreciation. So it's not considered company cash, okay? So you won't see depreciation in the cash flow report. Last thing of note here is that the company's cash flow, well, it would be negative actually, because their total expenses versus how much revenue is coming in January, well, it's mismatched, right? We're expecting that those 5 clients are maybe going to pay within January, most likely going to be February, maybe later. So really this company's net cash flow would be negative if that were possible. And the company would indeed be in big trouble if it weren't for one thing. We see here in the cash flow report that there was equity received. So there was a total cash in of $36,000. And from the reading, we know that that was the founders injecting some equity into the business to make sure they could get through that first month. So they put their own money into the business. And this money is not revenue, it's not from sales, so it's not reported on the income statement. That's why we do not see it here, okay? That's under equity received line here, okay? So why I wanted to go through this, I definitely recommend you go through this activity in the book yourselves just to get some more practice so that when, and practice it even with your own numbers in the future too, is that we need to learn to recognize, cash transactions that do not affect cash flow in our business. The only way we start to recognize these things is through practice and making sure that our statements are set up properly and we're accounting for these things. Luckily, you guys have that template and it's laid out very clearly about what goes where and what doesn't go where. So it's be hard for you to kind of make this mistake. So in this activity, 9.A, it just kind of introduces you to the questions you need to ask and answers, concerning your own business by going through just this sample cash flow situation here, okay? So key points to remember is that profitability in your business is critical. No business can operate forever without being profitable. And you'll notice I'll keep repeating that. I think I've said it 4 times already. A business cannot operate at all without cash. So understanding the cash needs of your business is a critical step to financial feasibility and success. So keep an accountant or financial expert close by to answer these tough questions during these setup phases and as you go on, if necessary, okay? Okay, so we're gonna go through a little exercise now and talk about cash flow management. We're gonna talk about how to avoid the risks of having a profit-rich business that is cash poor, okay? So we are gonna take, the information from this sample example we just went through and project its cash flow into February, okay, into the next month. So I'm gonna give you some time to analyze the information, make suggestions to the company, and this will help demonstrate how cash flow can be more effectively managed by developing a cash flow projection and kind of carefully analyzing its components. So I'm going to go through the steps first, and then we will kind of review it together. Okay, so if you've got your reading downloaded, this is page 363 that you're looking for. And then the information that you're going to need for the exercise is 364, 365. That is where actually you'll see kind of this report. It's kind of goes down through a few pages, so I couldn't fit it all in one slide here. So you'll definitely need to make sure you've got that open to do this. So we're going to use this information with this sample company that we just discussed, and you're going to try to, again, project February's profit on the income statement and cash flow on the cash flow report. There's little fill in the blanks that you can fill in. Now, I don't want to worry too much about the mathematical aspects here of calculating profits and cash flow, okay? Just more important that you get an understanding for the relationship kind of between the two. So that's going to be the first step, is actually you're going to go through and you're going to fill in these blanks that you see here. There's little gray boxes where you'll need to kind of, well, that's kind of the answers. Hint there, sorry. But there's little boxes on the side that you'll need to fill in. So you need to decide kind of what gets, what is on both reports and what's on one and not on the other, okay? And then the step 2 to this will be to discuss and answer the questions on page 63. So I'm going to put you in pairs for this, and you're going to have, or sorry, maybe, I don't know how many people we have today. Let me double check here. Yeah, we might just go into pairs for this then. So, and you can discuss amongst the two of you the questions on page 363, where you're going to discuss kind of this company's cash flow management options. And I want you to try to identify a solution for the company's current cash flow demands and needs. Okay. And then we'll go through and we're going to answer kind of a couple questions. Well, first one will be we'll just go through those questions that are actually there, and you'll see them listed out. So page 363, 364, 365. I'm just going to build our groups here, unless Kelsey has already done them. We have a question. If you make me co-host, oh, thank you, Jenny. Oh, they're already made here. Cool. Awesome. Looks like Brittany's in a room by herself. So let's move Brittany then to room 2. Okay. Why is Steve not in these? I'm going to just recreate these. 1 second. Sorry, guys. 1 moment. Okay, so we're going to take 10 minutes. We'll see you all shortly. If you have any questions, just come back to the main room and I'll be happy to answer any of those questions. All right, everybody, good luck. I hope that was okay for you. Curious to see, show of hands, who found that really difficult? 1, 2, 3, half hand here and there. Okay. What was hard about it, if anyone wants to share?
Feeling like we didn't have enough information about the company to make these kinds of estimations.
That's exactly what I was going to say.
Okay. Yeah. I think you're trying to deep dive it further than, it's more just looking at it from like a technical perspective. What gets carried over, what doesn't. You were probably wanting, Abby was probably wanting to go into a full financial analysis and make like real hardcore decisions.
It wasn't even that. It was like, okay, for example, Maisie and I were working together.
Yeah.
And I was like, okay, advertising and marketing and promotion.
Yeah.
I'm like, okay, we didn't know if they were, I think we thought they were a new company, like this was their first month.
Yeah, it was.
So we were like, maybe they had a lot of promotion. And that's why that was that amount. So would that be the same in February? Are they going to do a Valentine's Day promotion?
If you
know
were,
what I mean? Like,
if you looked at the first line of the instructions, it said you just assume everything is the same for all expenses.
Oh.
It's
I remember seeing that,
yeah,
but obviously not applying it to the exercise.
Yes. So we were to assume that all things stay the same. Maybe I should have reiterated that. I apologize if I didn't. It is definitely in the instructions on page 363, but okay, well, now I'm intrigued to see like, okay, what kind of adventurous things you came up with, but Well, okay, let's get into that in a second here. Let me just move my window over so I can see everything else. Whoop, what did I just click? Oh, you guys don't need that. Okay. So the first question I guess that I have is, all things being equal then, was profit adequate enough to generate cash flow? Did anyone have an answer for that? Or was it hard because you weren't under the assumption that all expenses stayed the same? Anybody?
No.
So it was not. Okay, correct. Is that so? Even though the company, recorded a profit in the first month, right? We had that $200 profit. It is not enough to generate cash flow to support the operations and growth, because as we can see from what the statements are showing us, sorry, I'm just going to look over at my tiny screen here. Where am I here? Okay, so our operating income that was left over of $200 is certainly not enough to cover our payroll that carries over, our taxes, our benefits, all these other things that are being covered, right? Remember, if we think back to that example, the owners had to put in $36,000 of their own money to get things covered for that first month. But a lot of those are ongoing expenses that keep happening. And we only had enough cash at the end of our first month. We had $200. That's certainly not enough profit to adequately cover our cash demands. Okay, second question. Is cash flow sufficient to fund cash flow needs? Well, we also know that, the answer is no, right? So cash flow is certainly needed to pay for things that are going to generate additional revenue. So when we're talking about those marketing expenses, maybe there is a Valentine's Day promotion. There's other things that are going to actually increase. If we even keeping things the same, the answer is no, right? So we had a $1,400 marketing and promotions budget, but it probably would go up for February, depending on the type of business this was, right? So that positive cash flow in January of $500 occurs only because the founders infused that $36,000, right? So the business does not have enough cash flow to support any additional growth as well. So what are the consequences of having such a meager profit and a tight cash flow in a business? Anyone want to just take a stab at that?
It's hard to grow or get anywhere because you don't have the money that you need to invest in anything.
Yeah, it's hard to basically do anything. It's hard to even breathe, right? There's not, in this business, there's not enough cash to even make it out of month 2, right? Like whoever started this company was not making some sound decisions before they opened the doors, right? So yes, consequences is they close within 2 months, right? They're quickly going to need a line of credit. They're quickly going to need more cash injected into this business. So consequences, they could shut down. Consequences, they can't pay their bills. Consequences, they can't pay their people, right? So last question. Oh, that was the answer to that. Sorry. Last question. How do you think the owners should cover the cash needed for February until the January invoices are paid by those customers? So remember, there's 5 clients that they have. So there's money out there that they're waiting to collect. How could they cover themselves until February when that money comes in? Anybody?
I go straight to like a loan or a line of credit, something to just hold them over until, and then maybe putting pressure on the companies or people that need to pay them.
Definitely.
They should join Leap In so they can learn how to run their business effectively and use that $5,000.
Bonus points to Abby. Bonus points, definitely. So yes, they need to estimate and first find a source of cash, figure out, okay, like where are we even able to get money? Is it going to be equity? Is it going to be debt? Is it going to be increasing sales? And that other part here, sorry, give me 1 second. The boss is asking to leave. Hold on. See you, pal. Okay. So, and the key thing to note here is that you don't want to get into a position where you're so not liquid with cash and like it's an emergency decision where you're like, oh shit, I didn't project this. What do I do now? Because it takes time to figure out what is even a possible source of cash for you. So you need to get way out ahead of this. You need to really understand your cash needs so that if and when something does happen, even if you don't have a line of credit, let's say on hand or something else like that, at least you're like, oh, I've got that list of things I was researching that I know I could kind of go to. So it's important to be prepared here. So what would happen to the company if one client didn't pay an invoice? So that's the thing to think about. When you've got people on net 30 terms, or whatever terms you've agreed to. And, Cecilia, I'm looking at you, with your customers, your clients, you're putting out the expenses, your time, your effort to make these goods for people. That doesn't guarantee they're always going to pay you on time. It doesn't guarantee, I don't know if you've decided you want cash upfront all the time, maybe a deposit, that's great. But what if they just don't pay you? Right? And you were expecting that cash to be there for, I had to buy a bunch more fabric, I had all these things, I had to pay another designer, I had to do this. So what happens if they don't pay you an invoice? Well, then you have less cash and you can do less things, right? It's a bad consequence to have, but we have to always, assume that these are possibilities that could happen. So make sure we have enough cash on hand to, to shelter the storm, to prepare for this kind of windfall that can occur. What changes, if any, would you make to improve this company's cash flow? Anybody come up with anything?
So we had discussed the marketing, promotion, and then the advertising. We were kind of a little bit confused about the two different things we were thinking. The marketing and promotions is maybe like that copy, like from Jill, where like and we talked about possibly like they might be able to reuse some of those hashtags, some of those like end things, and kind of instead of paying someone to make up everything, like kind of like recycling some of their stuff they have already used this previous month to kind of subsidize February a bit. So I think we decreased it by like about $400.
Nice.
And then office supplies were off the charts, like $3,400. I'm like, can we stop using staples? Can we double side printing? Like, I don't know.
Right. Obviously, there's not enough information to know whether or not their operating expenses are something that can even be adjusted at this point, right? I think, I'm using this basic example to kind of just drill into your head that, well, the most basic change we can do to improve cash flow is to just secure windfall external funding in order to help support your operations. Because you might not be able to reduce expenses. That might just be the cost of doing business at the bare minimum, right? Yeah, you could maybe cut marketing and promotion out, but maybe that leads to 0 sales for the next month, right? So we don't know that. So I'm just trying to drill into you that you need to know, and if you want to improve cash flow, you need to make sure that you've got some type of backup that includes external or internal kind of funding opportunities to help with your operational costs. Collect accounts receivable, definitely. Since this is their first month in business, they've already given those net 30 terms, but yes, ARs, managing your accounts receivable is definitely key as well. And also managing your accounts payable too. So if there's, in this example, if you guys read in there is outside services. Those were the things that they paid out on like net terms for somebody else. So they hired some other consultants, but they agreed to pay them at a later time as well. So can you defer payments to keep more cash in your business? Now, Abby, you wanted to add something?
I was going to say exactly that. Like, what are the outside services? Are they accounting? Are they graphic design?
Right.
Were they things that were front heavy for the beginning of the business that they may not need cash for in February, but we know that the expenses stay the same? But is that something that they could reduce for those purposes?
Exactly.
Another thing I was thinking about was like the contracts that they do have in place. Like if they made $39,000 in sales, but they made no money, like they aren't even taking retainers or deposits or anything to secure that money.
Yeah, it could. Yeah, I guess we don't know the intricacies of this business, but that's true, right? They've got, all of that money is sitting there. So it's just one invoice, right? It just says they're a consulting company. It doesn't say what they consult on. So that could just be the standard way of doing business in that industry, but maybe there's opportunity for something different there. So you could at least get, 30% upfront or 15% upfront at least, and that's for some of you here, definitely, especially, I'm going to pick on Cecilia today, but Tracy, you as well, getting that, a deposit up front or some type of retainer definitely helps cover cash windfalls as well. Okay.
I was going to mention something quickly about the depreciation.
Yes.
If we're going under the assumption that it stays the same, then they're likely using straight line. But if there was another type of depreciation being used, there may be an opportunity to save money in that way, but it's not an actual cash expense, so that doesn't even matter.
Right.
Okay.
But in the long term, see, this is why we all need accountants on our teams, guys, so they can find you some more money. Thank you, Abby. So what do we actually learn from this activity that you can apply to your own business? Well, first thing is that, in the future, you want to use kind of the same process of this, to evaluate kind of the profits and cash flow needs for your own business. So you should be stacking your income statement next to your cash flow statement and kind of doing this as well to see where there's differences. So the next thing we're actually going to go into is investigating sources of needed cash. But things I want you to remember here is that you may have positive profits and cash flow, which is great. It's definitely better than negative. But you still can be without sufficient cash to make adjustments for market changes, for those growth opportunities, for unexpected things, or customers who just fail to pay. So keeping a watchful eye on this is very important. Most businesses need a source of cash flow external to the business to help support your just standard operations and growth. So cash and profits, they work hand in hand to support your actual revenue generating activities. So make sure, when you're going through and filling out these statements, if there's months where you're going to have negative cash, make sure that's okay. Like maybe if you still are living at home with your parents and if your business goes into a negative deficit, that's okay because you can survive that windfall. And because you're the only person in the business right now, if you don't have a mortgage payment or anything else like that happening right now, that's probably okay. But that's not everybody's circumstance. So you want to keep a watchful eye on these things to make sure that you can survive any of those negative months. Okay. So we know that cash is important. We know we need to keep it on hand, but where does it come from, right? So this is why our next step is going to be about seeking funding. We're going to investigate some sources of that needed cash. So if you recall, you had to consider startup and operational funding needs way back in week 3 in our third kind of fast track module. So now is a good time to revisit those projections, after this session, update them and enhance them using additional information that you've accumulated throughout our many modules. So we're going to take a look at a revisit to action step 3.3 from back in week 3. Okay. And if you remember that worksheet, so I want you to actually consider sources for ongoing needs by making sure that you've answered kind of these following questions in your own time. I want you to know what types of funds that you are now seeking from different potential sources. So, most of you will probably have just identified sources for startup funding only, but some of you, it's going to be for operations and growth as well. You need to know why you need to seek a different funder for your ongoing needs. So, obviously we got to remember that our different funders like Libro that came last day and the many other types that we'll talk about after, they have different interests. They have different goals in providing you funds. And that may not encompass all the needs of your business. So it's important not just to rely on one source. We have to understand many different sources and what they can provide to us and whether or not they're going to be right for us at different stages of our business. Okay. We need to also consider how you will identify the amount of money you need for ongoing operations and growth. So how do we do that? By analyzing the cash flow report. That's how we identify how much funding that we might need. That's why this is really important, because we may have had this great business idea in our head up until this point, and that's awesome when we're starting to, meet with suppliers and other vendors and getting sales lined up. But have we really analyzed, like, once we start doing more repeat sales, how much cash is going in and out? That's why it's important to start doing this on the regular, doing a cash flow report, okay? So go back, jump back into that worksheet, take a look at it and see if anything has changed, and make sure you answer those questions or look at those questions again and make proper adjustments. On page 340, there's a reality check called establishing funding goals. So, considering the sources that you began exploring back in module 3, for example, you may have found a potential equity source, who's, some rich uncle who's going to give you money immediately, but the costs are high. Maybe the rich uncle is a business person and is like, listen, yeah, I'll hook you up, but I need you to cut my grass indefinitely for life. No, I'm going to charge you like a decent interest rate or whatever it might be. Or maybe a little more traditional, your bank, is going to be your potential source of funding, but it might take 8 weeks to put your loan together. And maybe you need that money now, and the proceeds may not be used in the stipulation of this loan for working capital. So we need to understand, by using this reality check here, funding goals, we need to understand, what our goals are, what we're actually trying to achieve, so that we can choose the right sources of funding. By looking at the, I need the money for such and such time, how much money you're going to need, what the funds are going to be used for, how much you're willing to pay over and above with including interest, how much control you're willing to give up in your business for that money, and what some serious, what are the positive and negative consequences that you're willing to risk. These are important to understand when you're thinking about internal and external sources of funding for your business. So use this reality check to record your goals and establish which sources kind of best match your goals for the type of funding that you might need in your business. Once you determined, your goals for obtaining these funds, definitely consider when you will need them, because it might not be right now. A lot of you might not need external funding at this moment, okay? And key to that is understanding, what stage of business that you might anticipate having cash needs, okay? And that's going to bring us to our next topic, which is about funding and stages of business. So it's helpful for you as entrepreneurs to consider the goals of different funding sources as you begin to seek funds in the different stages of business. So you need to take time to identify your own goals for funding to match them with sources that will more likely help you, okay? As you begin to identify your cash needs of your business, you should also keep in mind there's different phases of business growth. Most of you are in this stage here of startup funding, right? We're in that conception or the startup, and we haven't gone to full, maybe 1 or 2 of you might be in early stage of operational funding, okay? And as your businesses kind of progress through these different stages, we have to plan and prepare for cash flow shortages and have funding sources ready to provide the cash that you need. Once you've determined your funding goals and the stages in which you will seek this funding, you're ready to survey the types of funding sources available to determine which ones might be the best fit. Now, it's important to note that funding sources definitely have different goals when they provide money to businesses. I mentioned this just before. And depending on the stage your business is in, the funders will expect different returns on this money that they've invested. An angel investor or venture capitalist in when they're funding a high growth business is looking for a much different return than what a traditional bank or a micro loan from a small business association might be looking for, okay? Now, some funding sources, they want an ongoing relationship with you. Others, work towards promoting small businesses, and that's why they're doing it. Some are simply just trying to earn as high of a return as possible on their investment. The goals and expectations of funding sources are always really important to know. as you seek funds in kind of these different stages. So it's not just important to know how much they're willing to give you, because that's usually the first thing we're looking at. Who's got the money and who can give it to me? It's also important to know what they want to get out of it, because that's really, they're like another customer. And we know a customer's most important thing to be aware of is what's in it for them. Same with your funders as well, okay? So let's look at kind of some of these different stages. I'm not going to go through everything here. I'm just going to go through kind of the ones that are most important to you guys. So for startup funding, you know, that conception and startup stages, most people in these stages, well, they rely on their own money sources when first starting a business. That's the most common. Even, you know, financial institutions in business, even financial institutions that are in business to loan money are, as we learned from Thomas and Nate last day, they can be reluctant to lend to startups depending on certain circumstances. You know, and this position it's not a personal gripe against startups. It's just based on the high risk nature of all of your businesses at this stage, right? You're not a sure thing. Generally, banks and credit unions will only lend money to startups if, what did we learn? Like the 3 C's last day, right? You know, if you've got good credit history, if you can provide solid collateral to secure the loan, and if you can personally guarantee the loan. So be prepared in these early days, if you think you're going to need some funding, to take a hard look at your personal financial situation in order to identify sources of this startup funding. You know, looking at your savings, and if you're thinking that someone's going to invest in you without you investing in yourself, you know, you might want to think again sometimes, okay? Home equity loan is something you can look at too. The book goes into detail about kind of the risks of looking at that as well. So definitely if that's something you're considering, please take a look in the manual. If your own personal financial situation doesn't reveal funding sources, however, you know, consider whether you might have anyone in the F network, you know, we call them the friends, the family, the fools, who might be interested in making an initial investment in your business. Sometimes they may be interested. Families most likely to get in really early. The friends and the fools usually are when you're in a little bit of a later stage, because they're like, oh, prove to me that it is something worth investing in first. But many entrepreneurs, you know, they start businesses also on the side, like many of you are while you're still employed. And that's important to do too. You know, we're talking about cash flow. So sometimes that cash flow is just coming out of the other job you're working to kind of support the early stage growth right now. So keep this in mind if you're having difficulty finding other startup funding. The early operating stage, well, that at this stage, you can start to develop stress on your business's daily cash flow balance. You know, and many of you at this stage would start seeking lines of credit in order to give you that flexibility of growth, you know, to have funds available when you need them. Banks are definitely much more interested in lending to businesses with an operational track record. So obtaining loans for purchase of equipment and other large items generally easier at this stage rather than the startup stage. Keep in mind that in early operating stage, you know, the F network, as I just said, also become more interested in investing here. And for those businesses that might end up becoming a high growth opportunity, angel investors might also be interested in getting involved, both from a funding or just an expertise point of view at this stage as well. Now, alternative sources also become more available to you as your expertise grows. When you get into this kind of early operating stage, you're becoming more of an expert. So you might be aware of potential customers, suppliers, even competitors who could become a source of cash flow. They might not directly invest in your business, but maybe there's a joint venture opportunity that you could create. Either way, your network is expanding and growing, so there may be a lot more opportunity once you're at this stage. When we look at growth and rapid growth stages, this may mean expanding to a number of locations, could be creating now a production facility, or it could just be kicking up operations to expand into new markets in, you know, across the country or into other countries. Typically, though, businesses in this stage, you know, they've got increased levels of payroll, you know, because they're also doing a ton more inventory purchases and buying new equipment. And all of this generally takes a heavy burden on your cash flow. And all these expenditures are expected of a business in this growth stage. And because they're expected, funding is a lot easier to obtain when you're in these stages. And funding sources for this phase will include, banks, angel investors again, but they'll also start to include venture capital investors, what are called private placements, which not something, if you want to learn about that, read it on your own time. And of course, what we call IPOs, which is initial public offering or taking the company public, which is pretty unlikely. I think on average about in North America, 600 companies in total each year go public. And you've got to be doing quite a serious amount of revenue to get to that point. So if you really want to, you got aspirations to go that distance, we can talk about it on our own, or you can do all the reading you want. There's also an ICO, which is new, and that's an initial coin offering, which has become relatively new in the last like 5 to 10 years. So some companies, they're growing so rapidly, and depending on the type of business, might actually be able to do a currency offering with cryptocurrency. And that might be something you're interested in. Well, it's definitely a new area. It's very interesting. I definitely recommend if that's something you're interested in, take a look, take a peek, because what's happening in that area right now is very cool, but also very volatile and very dangerous when it comes to using an ICO to fund the growth and operations of your business. Can be super risky, okay? Either way, you're gonna wanna find high quality business advisors if you're at this stage of business one day to help you through this massive maze of funding in this big growth stage. This is where you need someone like a CFO on your team, okay? Lastly, once you get into that maturing stage, the revenues of your business, they start to kind of plateau off. The business is moving out of growth stages and entering what we call a mature operating stage. At this stage, companies usually remain very stable as long as you continue to kind of respond to changing market needs. The funding during this stage, it's similar to actually your early operating stage, since your business has already established relationships with lending institutions. Most likely you have lines of credit or short and long-term notes or loans. All these things are usually in place. Thing of note here when you get into maturity stages, though, is that lenders also recognize that businesses in this stage need to start innovating more in order to avoid kind of a decline in future sales. So if you hit a long plateau, this is where you start to get concerned. And banks that lend you money will take note of that. They'll keep a close, watchful eye on your business to make sure that you can handle a plateau that turns into a decline that turns into a free fall, right? So I just wanted to give you guys I know that was a lot, and it's a lot of stuff that doesn't apply to you right now, but I wanted to just kind of understand when it is likely that different funding comes in at different times so that you can prepare for it. I get a lot of people I take first time meetings with telling me that within 6 months, they're gonna have, a venture capitalist, injecting millions of dollars into this idea that doesn't even have an MVP built yet. And that's great hope, but it is super unlikely. And if any of you want to see what it's like to go to a venture capitalist meeting, any of you can join the Keiretsu Forum, which is here in London, and you can sit in on a meeting and see the types of companies that there's mainly angel investor groups at there, but some of them are also VCs, and it's interesting to see what types of companies are at this stage, what they're investing in, what the questions are. So if anyone wants to get connected to a network like that, let me know and I'll take you to a meeting with me, okay? All right, so let's talk a little bit more about these cash flow sources. So funding sources in your business are gonna be either internal or external to your company. So after you've considered the goals and the timing of your funding, you got to start thinking about whether your best opportunity for funding comes from these internal, external sources. So we're going to just focus on internal for now, as most of you are still in kind of this current stage. I've already mentioned kind of the various external sources, but there are quite a few others, and we're not going to go into those in detail. And you can read in the manual to kind of dig further if you're interested in learning more about the details of all these various types of external cash flow that might be, or external cash that might be available to you. So internal sources, why I'm mentioning this is because they have an advantage of being less expensive and taking a lot less time to secure. So first one, I've already mentioned, that's the current employment. That's that risk-free approach. You fund it yourself. Personal savings, home equity loans, the F network, credit cards. This is the one I actually wanted to talk about. Credit cards. Be careful, is all I have to say. They are important for your business, and many businesses use credit cards as a mean to jumpstart the company. That's okay. But credit card debt should only be used for a specific purpose, and it needs to come with a plan to approach more traditional, less expensive options in the future. It is a temporary thing. You don't want to use it like a long-term loan, okay? It's just poor planning. And with any other debt, credit card debt's got to be repaid. So this payment process, it can often be definitely difficult given the combination of an early stage business's tight cash flow and typical credit card companies' excessive interest rates, right? Because credit card debt is unsecured, it is personal debt. So if your business fails, you go bankrupt, using credit cards can risk your personal assets. So just caution there, okay? Lastly, those current earnings and profits. Of course, this should be the thing you're looking to most to be your internal source for cash flow. Existing companies, are expected to generate cash flow from current earnings. At the completion of your cash cycle, when people pay you, your business should have cash left over after all expenses have been paid, hopefully. Maybe not in your first year. Maybe you're kind of always operating in a deficit in the first year. That's okay, as long as you're planning for it. But this internal cash flow of current earnings or profits, it is integral for every business, because until your business becomes truly profitable, in most cases, it is paying, you're going to be paying out more than you're receiving in sales. Remember that's common. If you're not, then hurrah for you, okay? But after you reach profitability, the cash you generate can be used then to start paying back those loans, to finance more growth, and to pay dividends to the owners, hopefully, right? Or owner, it's just you. So external sources, this is just a list, okay? So things that you can take this deck and research these things later, but you should consider all options, first in internal funding, weigh those advantages, disadvantages, and then look for external sources, bank loans, lines of credit, short, long-term loans, SBA back loans. That's like the startup company or summer company grants that are out there. There's tons of different SBA loans that are usually supported by the provincial government or through the Small Business Center that you can check out. Sometimes they're run through BDC, Business Development Bank of Canada. There's always kind of different ones that are cycling in and cycling out. And they usually have great terms. Sometimes the interest rates can be a little wonky, so you want to look at the details of those payback terms. And the other stuff I've already mentioned on here. Other ones, a little bit more creative ones, customers, advisors, leasing companies. There's also microloan programs like Futurepreneur, who's going to be joining us next week. You'll learn about their different funding programs, which are pretty awesome as well. So there's lots of government microloans out there too, you can check out. And I encourage you to look critically at all of your business needs for funding at the different stages of growth and development, and go through and start, on a quarterly basis, make a list of possible things, both internal and external, that could be considered in the future for funding different aspects of your business. Oh, Amanda left. Okay, bye. I missed that. Okay, I need to take a drink. So just because we met with Libro, and just because you met with one bank, not only do we look at lots of banks and credit unions, we have to look at lots of different options for funding. You can't just go with the easiest thing because you just figure, oh, whatever, I don't like taking hard meetings and having hard discussions and proposing my business to get funding. You need to be willing to do this hard work and meet with many different possible sources, okay? Now we are gonna jump into the financial template. What time do we have? 3:01. Does anybody need a body break? Do we want to take 2 minutes, or do we want to keep going? Thumbs up if you want to keep going. Thumbs down if you need a break. It's 3-1 right now, and nobody else is responding. I think I've bored everybody to sleep.
I would like a break.
You'd like a break?
Yes, please.
Okay. 2 minutes. Come on back. See you shortly. All right, so yes, we are going to dive into the financial template now. So this is the point of the module where we're going to start talking a little bit about action step 9.1, which maybe some of you have already started doing because it's kind of a continuation of last module, but moving into a different worksheet in the financial template. So here we're talking about projecting your 3-year monthly cash flow report, which starts on page 366. Now, if you have entered most of the detailed financial information already from our last module, then we're going to finish by entering this information if you haven't already. So this action step, projects and reviews financial information in order to determine what your exact needs for funding for the startup and ongoing operations of your specific business will be. Before we were just using a couple examples, now it's about you. Important note here. Be careful to only enter startup information, both cash funding or any cash expenditures. That goes on the startup company setup worksheet, okay? Cash activities, both cash funding and cash expenditures happening after doors open. So for those of you already in business, those should be recorded on the capital budget worksheet and the equity debt worksheet that we're going to go through today. Okay. So we're going to use this financial template, as I said, to develop those 3-year monthly cash flow report projections and determine what your cash needs for startup operations and growth are. And you will enter your expected cash sources as well as any expenditures as well. So these are the template worksheets that you're going to use for this action step, and we'll screen share, and I'll show you these in detail in a moment. So there's mainly 3. It's the capital budget worksheet, and that's got 3 sections to it, and it's laid out very clearly on the worksheet. Section A is for depreciation, section B is for capital asset purchases and any depreciation that's post startup. Section C is any other type of capital expenditures. In the equity and debt worksheet, remember that is just when you're post startup. Section A is for equity investment. Section B is any real estate loans that you might have. Most of you probably won't have that. Section C is for traditional business loans or any other type of long-term loans. Section D is for your line of credit. And section E starts to show your actual cash position. That's where you're going to actually see the health of your cash in your business. And then lastly, it's going back to the startup company or setup worksheet and looking at the funding and expenditure kind of loan proceeds and equity investment section. We'll go over that in detail as well. So give me a second here. I'm just going to switch my screen share. Okay, everybody can see this now. See my mouse? We're good? Okay. So we're on the capital budget worksheet, okay? Remember last day, I think the last one we finished off was with the operating expenses worksheet. So now we're just one more to the right. Remember, it's in logical order, left to right. So the capital budget worksheet, this is where you will enter your budget for any capital expenditures and other uses of cash in the financial template. The different sections of this worksheet here, they're clearly laid out. As I said, there's section A is there, section B, I really need to get glasses, section C, and then I think that's it. Yeah, there's only 3 in this one, okay? So these worksheet sections, they guide you through the process of recording the cash you expect to spend after startup, so post startup, okay? You will enter all of your cash expenditures that are not considered expenses and are not deducted from revenue to determine your profitability in the end, okay? These non-expense cash expenditures, which have a significant impact on your cash flow, include things like computer equipment and machinery, furniture and fixtures. We're looking at Steve mainly on all of these. Some of you won't have any of these. They could also be leasehold improvements, vehicles, building, land, prepaid expenses, security deposits, and also payouts to owners and investors, okay? Now, what you should remember here is that you need to record startup purchases. Again, any startup purchases, so before doors open, those go on the startup funding and expenditures worksheet, okay? I think that's this one here, yes, startup company setup. And that all goes here, startup funding and expenditures worksheet. Now, if you're not a new business, you won't have this. You'll be entering historical balance sheet info instead. Okay, let's go back to my capital budget. Okay. So the instructions for each section in the template, they're very clear and they're very easy to understand. Okay, but if you have any troubles, please come and see me. But it's kind of word for word here. And then I also gave you that instructional worksheet that has a little bit more detail for these worksheets too. But these instructions for each section of the template, those help you determine which sections actually pertain to your business, because this is where it starts to really separate. A lot of this stuff may not apply to all of you, okay? So through this process, you're going to identify in section A, it's depreciation on existing capital assets. So if you've got equipment, furniture, vehicles, that's where we're going to start considering that. It could also be depreciation on any future capital purchases as well. Could also be other capital expenditures. So others would be owner's draws, so money you're taking out of the business that's not salaries, or it could be dividend payments, okay? But make sure you read each section carefully, as some assets, such as land, require very unique methods for recording depreciation, okay? And it's all explained in these blue boxes here, okay? Now, a thing of note here for payouts, I don't think it's actually listed individually here, capital asset depreciation, and then give me 1 second, other capital expenditures. Here we go, owner's draws. So for payouts to owners or possible investors you have, could be equity distributions or payouts. Those can be called by different names depending on the legal structure of your business. I just want you to remember here, in sole proprietorships, the owner can receive a check at any time for compensation, and in a sole proprietorship, that is always called an owner's draw, okay? In corporations, we call payouts to owners a dividend, okay? So if any of you are considering that, that's the difference there when you're using this capital budget worksheet. Limited liability companies, which I don't think we have any of those here. We don't have any lawyers or professional services or anything to worry about that, but it's typically called a distribution there. And then it can also be called a payout or a draw. So no matter what it's called, it amounts to a reduction in equity when we're talking about these draws or payouts to owners or investors. Owner's salary. So these are owner's draws here, and any assumptions we're talking about there. Now, owner's salary. So if you will be paying yourself a salary, that figure belongs in the production expenses for inventory projections. So if you're a business that carries inventory, that would go on this item line here, item line 63, salaries and wages. So if you're paying yourself a salary and you're a product-based business, that figure belongs in the production expense for inventory projections, or it can also be in the operating expense projections. It doesn't actually go in the capital budget, okay? So it would go here under salaries and wages as well for payroll expenses, okay? Now we need to make sure, let me go back here. So we have this assumptions page here. So include assumptions when appropriate. There's space provided here, okay? After you complete the capital budget worksheet, you may want to view the other worksheets in the financial template to see how all of this data kind of links and connects to the other worksheets, okay, and financial statements. And then make sure that this worksheet, you're going to download this one, and you're going to include these capital budget projections in the appendix of your business plan, okay? Awesome. Next, we're going to talk about the equity and debt worksheet. So in this step, you're going to record how and when money will be invested or loaned to the business over that 3-year period, okay? The equity and debt worksheet, it takes you through the steps for equity investment, real estate loans, traditional business loans, and lines of credit. So for a lot of you, this probably will not apply if you're not taking on any loans or investment right now. This worksheet will automatically calculate your cash balances to show whether you have adequate financing to cover your cash needs, okay? So you're gonna enter funds received for business operations after startup on this worksheet. And it's divided into several sections that represent the type of funding you plan to include in your business plan, okay? So we've got equity investment here at the top, real estate loans here in section B, traditional business loans and other long-term loans in section C, and then lines of credit in section D, okay? And then section E we'll talk about in just a second. So the equity and debt worksheet, as I said, you get different sections there. Now the funding you receive may include, it could include both. It could be equity, it could also be debt. These different sections, they go into detail, but we need this stuff included in your business plan. Now, again, for all you freaking out right now, because you might not say, I don't have all of this done yet, it's okay. Just do your best, make estimates where you need to make estimates. And if you're not sure if you're going to take outside investment or any equity draws, equity investment, then just tell us you're not going to right now. That's fine, okay? I just lost my place here. Okay, so there are some questions in this template that will prompt you in each section to determine if the certain form of funding, so line of credit, for example, is to be added to the planning period. So if they apply, you'll record them. So, you know, whether it's going to be equity investment, new loans received, and loan payments on existing new loans. So just go through this, follow it. It's pretty straightforward. So you're going to be asked like kind of 4 key questions in here. First one's going to be how much of your own cash and other investors' cash will be sought as equity. That's one of the key questions up here. The next one you'll be asked is, do you have an existing loan on real estate, or are you planning to seek a real estate loan during the planning period? The answer is no. You can probably ignore that whole section as well. Do you have an existing business loan is the next question. And are you going to acquire a business loan for startup, operations, or growth of the business? If the answer is no, you skip that section. Last question, do you have an existing line of credit? So that's a short-term loan used to cover cash shortfalls like we talked about earlier. Or are you planning to get a line of credit at any point? If the answer is no, you skip that as well. The last section in the equity and debt worksheet, as I mentioned, is the cash position section, section E, okay? This section of the worksheet is the reality check for your financial plan, okay? It's a very important piece. Once you've recorded your plans to obtain investments and loans in sections A through D, you got to review the cash balances here for each month. These will automatically get filled, okay, for a 3-year period. What you're going to be looking for is, are there any months here that show up near or below $0? If the answer is yes, then the worksheet here actually lists 4 options to consider. You can make adjustments based on these considerations accordingly. So you could consider taking an owner investment. You could consider outside investors, getting that line of credit. So it's giving you kind of some prompts here of ways you can fix these kind of shortages, okay? If you need help in determining how much of the loan repayment is principal, how much is interest, you can use this amortization schedule worksheet as well. That's kind of a bonus worksheet here. It's only for those of you who actually are either serious about getting a loan or already have one. It can help you determine, again, how much that loan payment is principal and how much that you're paying is going to be interest, okay? Now, the last worksheet is going back to that startup or setup worksheet, as I mentioned. So you're gonna end up coming back here. You've already entered startup items needed for your business in this worksheet. So you're gonna add to this information the amount you and or your investors will initially put into the company, as well as the amount you plan to borrow for startup funding and in the startup funding and expenditures worksheet on this page, okay? So complete this worksheet after all other worksheets have been done. And if you haven't done any of this yet, there's initial things you're gonna have to plug in, and you're gonna come back and fill in whatever's left over, okay? Once the equity and debt worksheet is complete, you will have a much better sense of the amount of cash that you're gonna need to support the business until the profits begin to generate enough cash to support the business itself, okay? Then the last thing you're gonna do is then go and review the cash flow report. So which is right here. So after you've entered all of your financial data into the financial template, you'll be able to, this will start to auto-populate itself. And it will, you can print it off or you can download it. You're gonna wanna review this and look for errors that you may have made in entering data in the other worksheets. So make sure you review it and go through it kind of with a fine-tooth comb, look for anything that seems out of alignment. And of course, you know, paying attention to line 16 here, total cash available, and looking for, you know, when you have those negative ending cash balances. So, you know, over the next 12 months, especially, when do you expect to have a negative balance and plan accordingly? Okay. And there is reports here for all 3 years. So if you're only doing a 1 year, that's fine. You'll have your 1 year, but there's space here to do it for 3. Okay. And again, these are all going to be auto-filled if you filled out the other stuff appropriately. Okay. So issues that you might have in doing this part of the financial plan. First one is that you have not yet completed all the financial template worksheets from the last module. Okay. And that's fine. But I'd like to know if there was a specific reason. Are you waiting on more research? Is the template a little too complex, or are you just procrastinating? Okay. But what is actually keeping you from completing this work? If you're really struggling with it, please let us know. And let's set up some additional time to go over how to deal with the issues you might be experiencing. Another thing here is, you know, make sure to review those action steps. Instructions are very detailed for you guys in the entrepreneurial manual. So make sure you review the action step instructions before you've decided, okay, this is too much for me. If you walk through it slowly, included, you know, as well as the instructions that are here on the template, you will find maybe a little bit more clarity. Okay, let me just switch my screen share back here. Sorry, guys. No momento. Hey, do it every time. There we go. So, so make sure to review those action steps instructions and ensure that you actually understand the next steps in the process that you might be avoiding. If it still doesn't make sense, come and see us. Okay. The other issue you might be having is you're still actually waiting on a few key pieces of information or research in order to actually complete the financial template. And some of you might be in that position. Totally fine as well. But don't let this waiting time slow you down. Please just try to make appropriate estimates where you can. Write your assumptions down for future reference, and you can adjust the estimate when the information comes in later on. Okay. You know, completing this financial template, even if it's just estimates that you're entering rather than facts, it's really the only way to begin to analyze, you know, the potential profitability and cash flow needs of your business. And, you know, we know that analyzing the cash flow report, it's important because it helps you to determine how much money you need so you can begin thinking about where it's actually going to come from. If you don't end up needing anything, that's amazing, but maybe eventually you might need it. So some people here might end up in business for 10 years before you ever need a cash flow injection. If you read the manual, there's actually a really interesting story from a husband-wife business where they were really lucky right out the gate. They were profitable and they went 10 years without ever needing anything from a bank, but they made a crucial mistake. They didn't have a relationship with a bank from a business perspective. They didn't need them for anything. So they hadn't actually built up the credit needed and a lot of other things needed that would have sped up getting a loan faster and getting the needs faster. So just because you don't need it now doesn't mean you shouldn't be building those relationships and thinking about the future needs that you might have, okay? Okay, so now lastly today, we're gonna just talk about writing the actual financial plan. And that's what action step 9.2 is. It's actually, okay, go through, you fill out the financial template, you download the sheets that you're gonna need, and we'll talk about the specific ones you should include in your business plan and appendices in a moment. But we're also talking about finishing off the actual write-up for that as well in the business plan template. And this is where you kind of prepare the information needed to complete the rest of the financial section of the business plan. And there's 3 steps involved in completing the financial plan. So first, as I said, print, download the statements that you're gonna need for the business plan. Before you submit it, make sure you're analyzing the results. This is not for us. This is for you guys. So make sure you're analyzing. You're not just doing this for the sake of because Dave said you should. So analyze those results and learn something from it. What did you learn? The third is actually to take what you've learned and complete the written portion of the financial plan. So these are the financial statements that you're going to include in the business plan, in the financial plan section. The monthly income statement, the monthly cash flow report, the year-end income statement, and the year-end balance sheet. And if you've gone and done so, the financial analysis ratios as well, okay? In addition to this, in the appendix, you can also include these additional financial statements if they have applied to your situation. So not all of these will apply to you. So for those of you up and running right now, so like Brooke, a historical balance sheet, if you have one, because that would have been part of filling out the financial template. Any of your startup funding and expenditures, your sales projections, inventory projections, operating expense projections, capital budget projections, and then the equity and debt worksheet that we talked about today, as well as your amortization schedule. If those apply to you, please include those in the appendix of the business plan as well. Now, so that was all part of step A of action step 9.2. So it's gathering up these statements, gathering up all of these statements, analyzing them, getting them ready, and including them in the business plan. And then step B is analyzing the financial statements and answering these questions. And these are written out in the manual for you. So first you're going to analyze the financial statements. Now this would be once the financial statements are actually complete. You want to do kind of that final passover, that final review to confirm that your business's profit and cash flow potential match whatever you set out as your personal financial goals at the beginning of this program. Although some of the balance sheet figures for some of you might vary, please be prepared to explain why your balances are significantly different if you have set industry standards, okay? So if you've used kind of those ratios and you know what the industry standards are and you see that there's a huge difference, just explain to us why, okay? Looking at the liquidity, risk, and efficiency ratios, that's what you would use to kind of determine that. We want to know, how do your ratios just compare to similar businesses? That's what we're actually asking. And how will you identify the areas where improvements are actually needed, if any? Okay. So these are the key questions here listed that you're going to have to answer. And it's just for you to this helps guide your review of them. So you look at your income statement. According to the income statement, is your business profitable? Is there net income at the year end? According to your income statement, is your required salary included? Are you paying yourself? If you don't have a salary, are you taking an owner's draw in the first year? Are you comfortable not taking it? If not, that's totally fine. We may ask you a question on that though, just so we see what your answer is. The other question is, according to your cash flow report, is the ending cash balance positive every month? Okay. And lastly, according to your balance sheet and other financial ratios, are the figures consistent with industry standards if you were able to find those industry standards? Then you kind of just make a summary that answers these questions, kind of compile it all together and explain, if you have to, explain why balances are significantly different and identify areas where those improvements are needed. Okay. In step C, that's actually just writing it. So you're going to describe a narrative of your financial plan, just in a couple paragraphs. You can see those business plan template examples are there for you, where you can see a summary of their financial plan in front of their financial statements. Here, you're just going to describe startup costs, your sales and income projections, cash requirements, sources of financing, and an exit strategy if you have one. Okay. Now, the template asks these questions to kind of help you focus on the highlights of the financial plan. So it gets us prepared to kind of dip into those financial statements. Okay. And then actually in action step 9.2 in the manual, there is a list of the modules where you have worked on the answers to this already. And they're listed there for your convenience. So you can quickly go back and find them if you've been filling out the different Word docs as we've been going along. Okay, so some key points here. So to complete the financial plan, you will need to have entered all the financial information into this financial template or whatever financial system that you've chosen to use for this program. A thing to really pay attention to is make sure try to not treat step B like an assignment and merely just strive to complete it. Remember, step B is the analysis portion, looking and answering these questions. Don't just do it because you got to. Oh, that was terrible English. This step, it's critical for your feasibility assessment for yourself. So you want to, take a look for warning signs that could mean your own personal finance goals are not going to be met by the business as it's currently being projected. Okay. And then lastly, once you have checked for entry errors, made adjustments for profitability and cash flow, and determined whether or not this business is truly feasible, then you're ready for step C. And this information should be entered into the business plan template according to the directions provided in the entrepreneurial manual and on the template. So step C here, describing and doing this narrative. There's some pretty detailed instructions there in the business plan template already in that blue font that you can see there. So it's very clear what to kind of include. Okay. Lastly, thing of note here is that financial plan definitely enables us to answer, key questions about our business concept. The reason we do this is so that you will know, does your business allow you to meet your financial goals with the current way it's set up? Can you actually make a profit with this business? And do you have cash on hand and cash resources to both start and continually run the business? That's why we went through these modules, to answer literally just these 3 questions and answer it with confidence. Okay. All right. We're almost done, guys. This is it. This is it. So a quick summary of what we learned today, summary of key concepts here. First one is that cash is paid out of the business in the form of expenses, any capital expenditures, any prepaid expenses, and those awesome owner payouts that hopefully you get. We learned that money is needed, certainly, to successfully complete each stage of the business. We need that cash, okay? We also learned that different money sources are available to us from a huge variety of different places and types, from angel investors to microloans to lines of credit. And they typically come, we're available, or they're available to us at different stages of our business. And we've reviewed those different stages. We also learned that most businesses are started with an entrepreneur's own pocket money. And we learned that financial feasibility is determined by comparing your business's estimated profitability and cash flow against your personal goals. Remember, this business is for you and nobody else. You get to dictate what those personal financial goals are. My business mentor, I asked him, what was the goal in his business? What was it he set out to do? And he had a great exit from his business. And he said the only thing he ever aspired to do was to just provide for his family. And if he did that, he would consider himself successful. So what Abigail's personal financial goals are versus Tracy's could be wildly different. But it's important to be able to determine if your business can actually meet that or not. So a final look at the action steps for this section that that you're going to do to complete the financial template. Remember, it's action step 9.1 is doing that projection of the 3-year monthly cash flow report using the financial template. So you're going to finish entering that financial data if you haven't already done it, and begin analyzing your cash flow needs and the other financial projections as well. In action step 9.2, you're just finalizing the financial plan in the business plan. So you're going to write that financial section of the business plan in the business plan template, and you're going to use the information that you've gathered and projected in the financial template. And then the last action step is to read module 10, which is our final and last module that we'll go through tomorrow, called implementing next step. It's like, okay, what's next? That's basically what we're looking at. And I'll give you a quick glance at those. In action steps for tomorrow, there's a feasibility checklist. It's like, okay, I've done my business plan. What do I do now? How do I know for sure that my business could be successful? So there's a little checklist we're going to go and review. We'll talk a bit about completing your executive summary, because we always do that last. We'll talk about finishing and assembling the plan all together, just compiling it and getting it ready for your presentation, which I'm sure you all are prepped for already. And then lastly, starting to think about the next steps you need to take to put this plan into motion over the next year. Last thing I want to say is, for those of you who still feel you might have unanswered questions about this financial part of your business, please come and see us. Whether it's prior to tomorrow, you can stick around afterwards, or if it's in the next coming weeks, even after Leap In, definitely come and see us. But all the pieces that you've been working on throughout this program, this is where they all start to come together. And this next module tomorrow, and when you present your business plan, will really help to really see how it all kind of fits together, and really start to think about like your action plan for like what's next and what's after Leap. And with that, I say, woo, we made it. We're finally done. The financial part of Leap In, my least favorite part, and probably yours too, or maybe that's just me. But thank you for sticking in there. Thank you for hanging in and being patient. I hope you guys learned something. And I'm happy to answer any questions that you might have now. Tracy.
I just have a question. Okay, so for the business plan, and I know that we've gone over this, but I'm just trying to like reiterate it for myself. And
yeah, totally fine. There's no bad questions.
Okay, so on Thursday, we're providing the demo day. Yep. And what time do we have to submit that by? Like midnight, or is it like a certain time? Yeah. And then we're doing one fan shot, like a fan shot shout out, obviously. And then
if you can fit it in, if your video's done and you used some help to provide it, and it's like going to be a gigantic pain in the ass to put it in, don't worry about it.
Okay. And then it's supposed to be 2.5 to 3 minutes, correct?
We gave you I told everybody
no more than 3, right?
3 minutes is the deadline. If you're over 3 by a little bit, I'm not going to be mad, but like
not over 4.
Yeah, like a couple that have come in have already been like, yeah, if it's over 4, we're sending it back to you.
Okay. Okay, so 3 minutes.
Yes.
Okay. I'm just like making sure.
That was a 2.5.
That was 2.5.
Wow, that's concise.
Okay, and then I have another question. Okay, so for the business plan itself, we're handing that in with our like presentation, or are we presenting the business plan itself? Like, is it 2 separate things, or is it one thing?
So the business plan presentation has its own kind of set of things that we don't want to sit there and you're going to go line by line through your business plan. So the business plan presentation deck was just kind of a highlight of some of the things we wanted to see. And you have the instructions set for that. And then we would like you to submit the business plan now as well, if it's completed. If you're still working on aspects of your financial plan, you're like, well, I need a little bit more time to finish that. That's fine. You can submit that after, but we're mainly looking for the presentation that day. And if your business plan is complete, we'd like you to submit it the same day as well, so we can kind of review those financial statements and go into detail around your marketing plan, just to see. We just want to learn what you learned and and it'll help kind of guide more questions for us as well. But if you'd like more time, that's totally fine, because the bonus of this is that we can get your business plan later, we can go through it, and we can go through it together one-on-one and have a chat and talk about these different aspects and do some, you know, external advising and coaching with you guys. But if you haven't done and you chose Thursday as your day, please try to submit it for that day.
Okay, but if we chose like the later date, then we just did it the day before or the day of?
You can submit it the morning of, yeah.
Okay, perfect.
I'm just gonna add a quick caveat to that. If you chose Thursday for your presentation, you need to submit the business plan on Thursday so we can see that you have the business plan done as well. So we can have a look at it. If there are edits later, we can talk about that one-on-one, but if you chose Thursday, it's due Thursday. If you chose the 11th, it's due on the 11th, okay?
Perfect. Just trying to like reiterate it for myself, just so I know and make sure that everything's, and then PDFs or Word documents?
Whatever you want, it's fine.
Okay, perfect. I think that's all of my questions.
Awesome, thank you, Tracy. Does anyone else have questions? Everyone say okay? Is anyone, oh my God, my brain just died there for a second. Sorry. How is everyone's demo days video going? Oh, wow, I can't speak anymore. I think I'm gonna just stop now.
I'll take over here. How is everyone's demo day videos going? Does anyone have any questions or concerns about the video?
Yes, but I wanted to talk to you guys after.
Sure, we'll stick around, Abby.
No problem.
Or at least I will. I'm not sure if Dave is going to be able to communicate, but one of us will be able to.
No one wants to share? Everything's going well, bad, like.
We got some thumbs up.
Got some thumbs up?
Steve
Okay,
gave
cool.
us a smile and 2 thumbs up, so I
Okay.
assume that it's going really well.
I'm excited to see them. So,
Yours is too short,
awesome.
Cecilia? How long is it?
Right now it's like 1.5 minutes, so
It's a bit short.
gotta add some more.
Yep.
Just add some B-roll of people walking around in your dresses and do a little narrative. Write a poem.
Random stock footage.
You say write a poem?
She did, yeah.
Good. Why not?
Okay, well, if there is no more questions today, guys, enjoy the rest of your evening. Thanks for tuning in today. And I know Cecilia, you and I are having a chat now. Abby is sticking around, but if anyone else is sticking around, we will be here for a little while to have a chat. And if not, enjoy your evening. We'll see you tomorrow.
Hi, everyone.
Bye.